Welcome to another episode of HKEX Voice, our podcast featuring insights from our senior executives and other industry leaders on Hong Kong's financial markets. I'm your host, 𝗙cie𝗹𝗹𝟏. HKEX had a good year in 2021, and the success of the ETF market is one to count, with increased liquidity, improved market infrastructure, as well as broader product diversity. Such strong momentum is continuing into 2022. Today, we are very pleased to have Brian Roberts, HKEX's Head of Exchange-Traded Products, to talk about the latest trends and development of the ETF market. Welcome to our podcast, Brian.
Thank you, Jeffrey. It's a pleasure to be here today.
Well, Brian, 2021 was a banner year for the Hong Kong ETF market. How is it performing so far in the first quarter of 2022?
Yeah, 2021 was a banner year, and the Hong Kong ETF market is really been a remarkable success story. And, at the end of 2021, there was a number of headlines that was achieved. And just to kind of start off with just a couple of them, ETF assets under management in Hong Kong achieved an all-time high. It recorded $55 billion worth of assets. Now, if you look back to 2019, this is over 25% growth. We were a little over $40 billion at that time. So we've seen really good growth there. Now, this growth has really been achieved by investors across the region, whether or not it's institution or retail investors, really coming to Hong Kong as their kind of port of call for ETF exposures as they access the world's capital markets. 2021 was an all-time, or I should say a 6-year high for net new assets coming into the ETF market, achieved roughly $10 billion of net new assets, and that was double from where we were in 2020. So we're really seeing a number of investors across the region really becoming attracted to this market. As this market has grown, so has our liquidity. At the end of last year, we've achieved about $1 billion of average daily turnover, and this is significantly increased from 2019, where we traded roughly about $650 million. And as you said, in 2022, the momentum has continued to grow and build on the previous couple of years. We have seen net new assets continue to grow. We've recorded a little over $2 billion in the first 2 months of this year. And kind of putting that in perspective, that's more than what we attracted last year. And again, last year was a 6-year high in terms of cash flow. AUM has slightly dipped so far in the first couple of months, but that's really been driven by market returns. Markets are just generally negative. So right now we're about $50 billion worth of AUM. But again, investors are continuing to add to their allocations here in Hong Kong. Lastly, I'll just mention is turnover continues to increase. We've reached an all-time high for average daily turnover. We're trading roughly $1.1 billion a day. So again, as more and more investors are coming into this market, we're seeing AUM grow, we're seeing liquidity grow as well. Yeah, and the last thing that I'll just mention is we've also reached an all-time high in terms of ETF listings on HKEX. We now have 155 ETFs listed on the exchange, and again, that's been driven over the last couple of years with just more and more product innovation happening. So this is really just a nice chemical reaction that we're seeing form in the Hong Kong ETF market.
Indeed, that is really great momentum, Brian. As you know, the market has been more volatile lately due to the latest pandemic situation and global geopolitical developments. Have you seen any impact on ETF volumes so far?
Yeah, we've seen volumes increase. And we've saw this, when I kind of think about ETFs, I think they've demonstrated their resiliency and their usefulness in terms of heightened volatility and just uncertainty. We saw this in the first half of 2020 when COVID, kind of took the world by storm. What we see is kind of two things happening with ETFs. The first is ETFs will serve as a liquidity buffer or a shock absorber during these volatile moments. And I think investors just need to be aware that ETFs have their own secondary market liquidity pool. So investors are able to enter and exit positions without having much effect into the underlying market. One of the ratios that we always look at is the secondary market trading to the primary market activity of an ETF. In normal times, this ratio is right around 8-1. So what this means is that for every $8 traded on the secondary market of an ETF, only one of those dollars actually moves into the underlying market, where you would have increased volatility and things along those lines, where it's affecting the underlying market. Now, in times of volatility, if that ratio is contracting, then you would say yes, it's having a negative effect. But what we actually see is the opposite. We see that ratio expand. We saw this in 2020. We're seeing this now. Right now, we're seeing the ratio around 15-1. So again, it just reinforces ETFs having this buffer for liquidity, absorbing a lot of this volatility that happens. Because if ETFs didn't exist, all of that money would move into the underlying market. Now, the next thing that I'll mention is really around investor buying behavior or investment behavior at this point. What we see is that ETF investors generally become net buyers during the market dips or these kind of declines. So again, just adding to that kind of that buffer and liquidity kind of absorption that could be happening.
Well, that's fascinating. Brian, thematic ETFs have been popular in the global investment world in recent years. What is it, and how is this category performing in Hong Kong?
Yeah, thematic investing, it's really garnered a tremendous amount of investor interest, and with that, a lot of investor dollars have been moving into thematic investing, but it's still relatively new. And thematic investing really kind of differs from the traditional way when we think about making an investment selection, right? The traditional way is using more fundamental metrics. It could be price to book, price to earnings, thinking about sectors like financials and consumer goods, right? So a very kind of traditional way of looking at it. Thematic investing is really the opposite, right? It's thinking about the future. It's thinking about these long-term kind of predicted forces that are really transforming the way that, we're going to be living, right? These are forces that are just unavoidable to us. We actually released a white paper at the end of last year entitled Transformative Forces in ETF Investing, and in really looking at megatrends, right? And there's 5 things that we've kind of identified that's really kind of shaping the world of tomorrow. It's rapid urbanization. It is demographic shifts. It is the rising economic wealth. It's also climate change. And last is technological innovation. We're starting to see more and more ETF issuers issue products relating to these megatrends. So, for example, electric vehicles. We're seeing autonomous driving ETFs. We had the first listing of the first metaverse ETF in Hong Kong. So this is kind of the way that ETF product development has moved into. And that's also been supported by investors. This trend really started to form in 2018, 2019, and then just really caught on in the last 2 years. In 2019, we only had 15 thematic ETFs, or what we would characterize as thematic ETFs. And at that point, there was only about $300 million worth of AUM in those products. Fast forward to the end of last year, there was roughly a little over 40 thematic ETFs listed on HKEX, and now they have gathered $6.4 billion worth of assets. So this is where a lot of, again, the innovation is occurring, but also this is where investors are now starting to think about how did they allocate and strategically position their portfolios.
So apart from thematic ETFs, what are other product trends that you have observed?
Yeah. There's a few of them that really start to take shape. The first one is China bond ETFs. We're starting to see more and more investors starting to look at China fixed income. And they're doing this for probably a couple of reasons. One, it has a very attractive risk-return profile. The second is that it offers diversification benefits, right? Generally, China fixed income has very low or negative correlation to, global asset classes. But I think for Hong Kong, where we've kind of see ourselves kind of competitively positioned is we really offer the most diverse China bond product platform for investors. You can get access to the to corporates, to the treasury sectors, to the government, and even down into kind of high yield and property segments as well. And we're starting to see more and more innovation happening there. So not only is it the most diverse, it's also the lowest cost. China bond ETFs can be found right here in Hong Kong. The second trend that I'll just kind of mention is, again, coming from the megatrend space, is the environmental, especially clean energy, electric vehicles. These particular types of trends have really garnered, roughly about $1.5 billion US dollars worth of AUM. And the last one that I'll just kind of mention is really Hong Kong equity ETFs. Whether or not it's kind of the broad market HSI or moving into more of kind of, again, technology-driven megatrends, biotech, HS Tech. They captured roughly about $2 billion US dollars of net new assets last year, and really bringing total AUM in those particular segments to over $25 billion US dollars.
I see. So as you said, Brian, there's been a lot of robust growth in the ETF market since the last few years, in 2019, 2018 until now. What do you think were the biggest contributors to that growth?
Yeah. So there's a few things that we see. I think the first thing that we have to acknowledge is just increasing adoption of ETFs across all client segments or investor segments in Asia. We're seeing a larger appetite of institutions. We're also seeing more retail investors enter the ETF market and invest in these types of products. So I think that's the first thing. This is, for a while, investors here were, I would say, later adopters, but we're really starting to see investors here in the region really accelerate that way. The next thing as well with that has to do with greater awareness for investors around the importance of trade Asia in Asia. I always hate to admit this, but it is a reality. A lot of times in previous years, a lot of investors in Asia would actually go trade Asian underlying exposures, right? If it's MSCI Taiwan or MSCI Hong Kong or China, they would actually go back to the U.S. to trade those kind of exposures. But I think with a lot of the education that we've been doing, the industry has been doing, really putting a spotlight on the cost effects of that. So the tax advantage, right? Having a better understanding of total cost of ownership and how much money potentially gets lost in returns by having to pay U.S. taxes on your dividend returns. The other thing too is also just the implementation costs, or what we would call the implementation shortfall of executing a trade that has out of time zone exposures, right, like Asian underlying, and doing that in the U.S. hours, right? You're going to start to see a lot of dislocation between the fair value of that ETF and also the price of that ETF and what it trades in the secondary market. And that can be quite substantial when you're trying to, track a particular index. The last thing I'll just kind of mention is there's been a number of, efforts that HKEX has really been putting into the market to really improve the supply of liquidity, so make it easier for market makers to provide liquidity, and also at the same time bring down the cost of trading. We've introduced new market-making programs. I mentioned the stamp duty exemption earlier. We've also provided more flexibility around settlement for ETF market makers. So again, when you think about tax savings, when you think about implementation shortfall, and then also tighter spreads and execution here, it's a great place to efficiently and cost-effectively execute Asian underlying trades here.
Now, of course, the market is very interested about the inclusion of ETFs into Stock Connect. Any update for our audience?
Yeah, we're very excited for it. To me, when I think about that announcement and the eventual inclusion of ETFs, it just adds to the overall momentum, energy, excitement that I think has been building and growing in this market over the last couple of years. And I kind of look at this in kind of two ways in terms of this kind of milestone for ETFs. I think first is looking at it just from the ETF structure. ETFs will be the first product type included in Stock Connect. I think that's a tremendous vote of confidence on just the ETF structure alone, again, being the first product type included in Connect. But then for the ETF industries, both in Hong Kong and in mainland China, this is going to be mutually beneficial. It's going to expand the investor base. It's going to expand investment options for those respective investor bases. The last thing I'll probably just kind of talk about is that this is the first step of getting ETFs included in Stock Connect. And when you look at the history and trajectory of Stock Connect, it's been one of continuous improvement, continuous evolution. And that for us is, getting ETFs included is a great first step, but we're going to continue to look at ways to improve product eligibility and market structure as time goes on.
Well, of course, we'll look forward to this evolution the next few years. Brian, thank you so much for your time today. I enjoyed learning more about the growing ETF market in Hong Kong and its prospects. Thank you, Brian.
Thank you.
For all our new listeners, if you want to learn more about this podcast or HKEX's markets, please visit our website at hkex.com.hk. From all of us at HKEX Voice, thank you for listening and keep an ear out for our next episode. So long.